You're watching the Daily Market Comment for Wednesday, May 11th by Raf Boyajian. I'm Christina Marujos, and thank you for joining us here at XM.com. Markets were in a cautiously optimistic mood ahead of the April inflation report out of the United States later on Wednesday, as investors geared up for a possible soft print this time after months of acceleration in the headline figure. The Consumer Price Index had jumped by a 41-year high of 8.5% year-on-year in March, but the surge in prices is predicted to have moderated in April to 8.1%. The question is, would peak inflation necessarily be the silver lining investors are looking for? There's a real prospect that it will take far longer than anyone is anticipating for inflation to fall to the Fed's 2% target, even if we are now seeing price growth level off. Until there's a considerable easing of inflationary pressures, Treasury yields and the US dollar may stay elevated at their current high levels. Nevertheless, the dollar is vulnerable to a sharp correction if today's CPI numbers are weaker than expected. The dollar index was last quoted down by about 0.3%, while the 10-year Treasury yield has pulled back more substantially. The softer greenback provided some breathing space for downtrodden currencies. The biggest gainers were the Australian and New Zealand dollars, lifted by ebbing risk-off sentiment and higher commodity prices. What is more interesting, however, is how well the euro has held up during May. The single currency has been steadily crawling higher over the past 10 days, as the hawkish voices at the European Central Bank have been getting louder lately. With a July liftoff looking more and more likely, the euro may have bottomed. What traders will now be watching is how resilient economic growth will be in the face of rising interest rates around the world. The sudden reversal in monetary policy globally towards normalization has knocked confidence in equity markets. The S&P 500 closed higher on Tuesday, while the Nasdaq Composite put a more convincing fight, rising 1%, and E-mini futures point to similar gains today. Risk appetite could benefit in the short term if China begins to ease its lockdown restrictions. Chinese authorities reported that 8 districts in Shanghai recorded no community transmission on Wednesday, raising hopes that infections may soon drop low enough for the draconian measures to be abandoned. This was the Daily Market Comment. Thank you for watching at XM.com.